Hello guys, my name is Shiva. I'm the co-founder and CEO of Webinity Technologies Private Limited. Let me introduce about my company. We are a fintech company. We're trying to provide a quantitative algo trading platform, which is quite comprehensive in the sense it has all the capabilities to monitor the market and initiate the trades and take care of the trades with a defined goal, right? So in this video, I would like to talk about uh, how to define a risk-aware quantitative system, or how to define and measure the risk, right? And before going there, I would like to I would like to talk about I would like to talk about a very big opportunity in the market, right? I'll quickly summarize it, right? If you see, right, this is the customer income or customer spending capacity in terms of investments. There are traditionally two kinds of institutions. One is mutual funds and one is hedge funds. Typically, retail people who do SIP would go to mutual funds and they invest for long-term gains. And HNIs tend to go to hedge funds where the entry barrier itself is quite high, right? So for the last 10 years, there has been a change in the income group. There has been a emergence of the middle income group, right? These people are techies, are these people who are working in the newly created jobs and who have better income. And these people started looking at financial markets. And somehow these people doesn't fit. They're not happy with the mutual funds because they want to invest for the short term, and they cannot fit into the hedge funds because of the higher entry barrier. So last 10 years, what was happening was there is a new service provider which is kind of coming up, right? Who are primarily software developers, data scientists, statisticians, people program, right? Because of the technical advancement of the financial markets, due to the emergence of the brokerage companies who are trying to expose trading APIs, and the developers started looking at these APIs and they started building on the existing frameworks to write their own strategies and all. So there is a new segment which is totally unorganized, and it's not something which is kind of matured in the sense that uh, first of all, we call it mini hedge funds because these people trade for short-term gains, and they don't invest; they kind of trade, right? And so this service providers, they kind of started automating stuff, but otherwise they are not mature in the sense that they cannot understand the financial implications uh, in the macro and microeconomical conditions, and they don't know much about the risk management aspect. Right? They are primarily developers and programmers who take advantage of the technology. That's how they start. So this is a very big opportunity in India. Whoever is trying to kind of crack it, right, they will have better opportunities. So Fibonacci, our company is also trying to do something here to provide some sort of a trading platform, which is kind of solution based, and we are also building on top of it. So now coming to the product or service that I am talking about, right? So if you are a service provider who is trying to cater to other people, right? You are providing an automation framework, or you are giving a solution oriented service, right? You should have some understanding of these four parameters, which will help you define some sort of mature structure to the product and service. We'll deep dive into those. The first thing is capital allocation, which is nothing but the fund size. So you should have done your study to say how much money you are going to put it in the product and how you are going to deploy this money into the market. It's not that you randomly take the fund and you try to figure out uh, in on the go like how to deploy. So that should not be the case. That's first thing. Second thing is Expectations. Expectations is nothing but for the capital that you have allocated, how much time do you think you can see any return, right? Is it like monthly cycle, quarterly cycle, half yearly, or yearly, right? And second aspect is how much returns. You should always report in terms of percentage of the fund allocation and how much returns you expect for that fund in this timeline, right? uh, you should put a number to it. You should be able to put a number to it. The third aspect is the risk. Risk also should be measured. So it's like for this fund in this time, before making this much of percentage, how much can be the maximum drawdown? How much can be the maximum loss that you can incur into this? And is it like it will act like a stop loss, or it will be a theoretical stop loss, but your system will recover from it, right? These are some of the aspect in terms of expectations. And third is like what instruments you are going to play, right? You should have a fair understanding of what kind of instruments are there in the market, and it should be like, are you going to deploy it in equity? Are you going to deploy it in derivative, commodities, or forex, right? Why it's important is that if you take equity, right, equity doesn't give you much handle to manage the risk, because equity will be deployed. You cannot hedge it with any other thing. There may be some ways, but it's not that intuitive or intelligent way to hedge it. And if you want to kind of handle the money in equity, then there are better institutions than us, which are kind of mutual funds who have a very solid understanding of the financial markets. Right? That's one aspect. Second is, if you are planning to do it in derivative, then you should know like what derivatives means, and derivative has futures and contracts, right? What futures mean and what options mean, what is the main purpose of it, how they should be utilized, and how the contract settlement happens, and what are the other implications of it. You should have a decent understanding of it, right? This is the third aspect. And the fourth aspect is that you should definitely have an infrastructure if you are giving a service or to the external party or something, right? So I would say that if individual or team is doing it manually, it's not system based, then I don't call it as a product or service. Okay. And you should have defined like whether you are using a traditional indicator setup as part of the system, as part of your infrastructure to manage these funds, or have you built anything on top of it which is kind of quantitative in nature, or it can be a statistical modeling component, or it can be anything, right? Have you done anything specific on top of it, and can you measure it, right? That's a that's uh, one of the aspect. And last but not the least is that who manages it, what skill set they possess in terms of the understanding of all the parameters that I have said, right? Tomorrow if SEBI or any other parameter governing body changes any parameter, right, will you be able to understand it? Can you derive what would be the implication on the expectation with that input? Can you correct your system to that? So these are some of the aspects, and we'll be talking about these in the coming sessions. We are also trying to set it as a standard. These are not certain some things which are completely new, but uh, uh, putting a structure to it and measuring it this way would be a good starting point, is what we think, and we're working in that direction. Thank you. Thank you so much for watching.